Hi, I'm Amit Nigam from Peerless Mutual Fund, and in this brief presentation, we would like to share our view about Indian equity markets for the year 2015. In our view, 2015 will be another good year for equities after a very spectacular 2014. After 5 difficult years, from 2008 to 2013, we have seen the Indian equities rally sharply from a zone of undervaluation to being fairly valued. This, in our view, has been driven more by a change in sentiment as the government changed sometime mid-year this year than any improvement in macro data. The new government, on its part, has been putting in an effort to kickstart a stalling economy. We had slowed down from a more than 8% per annum growth to a sub 5% growth economy. The government is moving ahead with improving the environment of doing business in India. The PM has visited many countries and has been putting in an effort to attract FDI. Also, domestically, the government has moved ahead with approvals for a lot of stalled projects and cleaning up some of the past inefficiencies, for example, the coal sector. These efforts, to our understanding, will have a lag impact on the business environment. The investments will pick up, but more towards the second half of 2015. The investments will definitely be first put in by the public sector, and then the private sector will come up with a lag. And with these projects coming up, we think that the economy, which had slowed down to sub 5%, will definitely pick up going ahead. The key catalyst, therefore, for 2015 in our view would be the investment cycle pickup led by the public sector and then the private sector stepping in. With this, we are going to see an environment of a virtuous cycle being set in, wherein the salaries for the existing employees increase, companies hire newer people, people have higher income to spend, the consumer demand picks up, and therefore the companies again set up capacities to meet the increased demand. But as I said earlier, this would all be more towards the second half when we will start to see an unfolding of these events. This will be further supported by softer interest rates in the next year. We have already seen some of the banks cut the deposit rates in the later part of this year. This would translate in improved corporate health, both in terms of earnings and balance sheets. Also, at the current juncture, if I were to look at the Indian markets within the global scenario, we stand out fairly tall because some of the other emerging markets are facing headwinds. For example, China is going through a period of slower growth, and its workforce is both aging and is getting expensive. The Russian economy is facing a recessionary threat due to falling crude oil prices and sanctions imposed by the other developed nations. Some of the other Southeast Asian economies, especially like Korea, which have a high dependence on global trade, will be adversely affected as the global growth next year is projected to be slower, and also they have an export basket which is very similar to Japan, and due to the sharp Japanese yen depreciation, they stand to lose out there. In such an environment with a stable government, we believe India stands a greater chance to attract a higher share of foreign flows in 2015. Having said this, we believe that the equity rally will slow down, the pace of equity rally will be slower next year, and at least in the first half, because for 2 points. One, we are no longer as cheap as we were at the start of last year. And secondly, there would be a large supply of paper from the government to meet the fiscal deficit targets. So therefore, the returns would be more back-ended in 2015. They would coincide with the economy picking up, and as I said, this will play out in a good 2015 for our investors. We at PLS are driven by the philosophy of investing in companies that have a good business model and hence have good return ratios, particularly ROCE, which is return on capital employed, having positive cash flows, and also these companies are run by good management. And these are the management who respect and care for minority shareholders. With such a philosophy, we believe that investors can make good returns in these equity markets over longer periods of time. Thank you very much.
Mutual fund investments are subject to market risks Read all scheme related documents carefully.